Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, live streaming from Ticket-Tacker. We got a fast market to the downside in the gold market. Silver's down 105, down 3.7 cents. And the gold market is down to 1743 and a half, down about $31. The first thing I want to do this morning is I want to congratulate all of those great analysts in Reddit, all those great analysts in Wall Street Bets that have literally skewed the market in a tremendous way. And, you know, here's an example of basically the chatter, which is what they are. This type of player that is coming into the market here is basically food for sharks. They are a pump and dump website that have no understanding about trading or the markets. And I think it was one of the worst things that the markets could have experienced right now. And I believe that they have skewed the market tremendously. I would like somebody from Reddit or Wall Street Bets to explain to me how the price of silver and gold can be down $50, $60 on the face of all of this tremendously bullish news of a short squeeze. Where is the short squeeze, Reddit guys? They call themselves retards, and I think it's for a reason. I would like somebody to explain to me from Wall Street Bets, where is the logic of their actions besides a pump and dump situation in the market? And they are causing small traders that have no idea how to trade the market to lose incredible amounts of money. How can somebody explain to me, under the face of a shortage, how can the price of gold be down $40? This is an incredible anomaly that, again, thanks to Reddit and thanks to Wall Street Bets, they have provided this tremendous volatility to the market that makes no sense at all. Absolutely no sense at all. Reddit guys, traders, if you're listening to this, don't you think that the short sellers, understanding what you guys are doing, are taking more aggressive actions to short the market against your sentiment? Welcome to trading. For those that entered the market in on the basis of this chatter, I would suggest to just be patient, because the market, although it is frustrating to see the price of gold down $35 with a blink of an eye, on the face of a pandemic, on the face of short supplies, on the face of the supply chain being broken, and the monetary system collapsing, is an incredible development that one has to take a look at and see where the opportunity lies. So understanding that we have this massive sentiment now out there that have no idea what they're doing, except that they're pumping and dumping stocks, throwing the dynamics of the market completely out of whack. And I think, it's something that will adjust. The market always adjusts. And but in the meantime, until we see the situation adjust itself, you're getting a lot of choppiness in the market, incredible choppiness in the market. So you want to be careful that you don't buy on margin, because you got wiped out if you did. Don't follow the herd. We have a saying in the business, those that have been around for a little while: pigs get slaughtered, hogs go to the market. And I think we're looking at a bloodbath based on this Reddit news that skewed pretty much, the fundamentals of the market tremendously. The way to make money in the market is not by trading the headlines, ladies and gentlemen. When you read the headline in the front of, as we used to say, the Wall Street Journal, and now it seems to be the front of Google or, the internet, it is usually time to pack and get out. As we saw back in, this rally that was the Reddit rally that supposedly was going to take silver to $1,000 an ounce. And all we saw was a little bleep to about 30, 35 on the silver market. And now we're back down to test possibly even the November lows, if we don't see any buying coming into this market. Let's not jump the gun here for a minute, and let's take a look at the silver market and see where it is here. This is no time to panic if you're holding on to the long side of the market, which it is bullish. The fundamentals have never been bullish in the precious metals. There is a tightness of supply. And the short side of the market, understanding that the whole world is aware of it, and unless the buying strength overwhelms the short selling that's going on right now, we're gonna see this 30-35 area as the target or as the next challenge to beat. We've come down, if we want to talk about the market here for a little bit. The market has come down to the extreme level below the mean of 2773, which is really the buy to level on the daily. It's below the buy to level on the daily. So the daily is extremely oversold. And if you're looking for a trade, what we want to see is a close about 2673. that will activate a buy trigger from B2. Right below the B2 level, we have the weekly buy one level of 26.29, which is active. When the market came, when it reverted back from the daily average, you can see here yesterday it reverted right back up again, but experienced more supply coming into the market, and the market came down below the weekly, and the weekly signal, the price closing under the weekly average of 27.18 is what activated this 26.29 level. But in between, we have the daily 26.73, and the price is trading into this blue zone that we identify as the highest probability area where we can expect buyers to come in. And let's watch the market. Let's not get emotional, because what happens usually after they clean out this market because of the sentiment, from 30, 35, we're down to 26.60. It's about a $3.50 move, a solid $3.50 move that reverted the market back to where we are, which is pretty much at the extreme now, below the mean, potentially activating what you see here is this weekly of 26.29. We're not that far away. 30 cents in silver is like 3 cents in the old days. The leverage is, or the volatility is incredible. So what you can see here is the market failed to follow through on the Reddit news, on the chatter, on all of that pump and dump news, which was perfect for the short sellers to dump into this and, put to test, again, the strength of the sentiment that looks for prices to be at $1,000 an ounce. Now, is it possible? The only thing I say when we talk about the price of metals here is that you have to realize that in order for silver to be at $1,000 an ounce, where gold needs to be. And so if, you're looking at the gold and silver ratio, $1,000, I mean, gold, you're looking into the, 20,000 an ounce. Is it going to follow Bitcoin? There's no reason why gold couldn't go to 20,000. If Bitcoin, who's not a currency, doesn't have any intrinsic value, pretty much, can go to 50, 60,000. Gold, who's been around for thousands of years, or silver, which is completely ignored right now by this world of virtual currencies, that I believe personally are headed for disaster. I don't think it's going to be that easy to just eliminate the US dollar and bring Bitcoin as the currency of choice, because it's not a currency. It doesn't have any value. except for speculative value, for speculative purposes. I just want to point out last week here in California, there were failures to enter into the internet. The internet failed in several places. And so if you're relying completely to run your life around the internet, good luck. You know, it really is a risk in itself, because you really don't know when they can shut it down or when you're going to have a problem getting into your account. So I caution people, if you want to trade Bitcoin, you know, I'm doing it through the Grayscale Bitcoin Investment Trust, which is registered. It's registered by the exchange, and we do use the indicators, you might say, of the VCPMI to enter and exit the market. And you can see here the market in Bitcoin is down about 383, 41,800, 4180 for the GBTC. And we've come down to about 4064, which is pretty much the first level of support using the Fibonacci uptrend lines. So we want to see what it does when it gets down here. But in the meantime, we're looking at the metals here as well, capitulating potentially as the options, the March options, do expire. And so now, obviously, they're killing the 2650, 27, 2750, 28 call strikes are worthless. And what we usually see after such a correction here is that the market resumes its natural trend and its natural uptrend. And again, I am you know, baffled by this anomaly that we have, and I'm truly being honest with you in terms of you know, gold being down here at 1731 under the face of a shortage of supplies. It just doesn't make any sense. So what I have seen, and this is very similar to what we had back in March, when the cash market shut down, you couldn't get gold unless you paid $80 premium for it. And we had an inverted cash market to the futures market, to the paper market. And they were able to drop the price of gold, you know, down to 1450 before we saw a bottom come in, and the market rallied $60. I'm sorry, over $600 in a short period of time. And it looks like we are liquidating a lot of weak buyers here are just getting out, and you can see the dumping and you can see the price at the same time coming down. Now we're into the weekly levels. So let's see what the market does here at these levels as it trades through the day. Let's just watch the market here a little bit. the gold market or the metals markets, from what I have seen in my trading career, so to speak, or as long as I've been around here, which is quite a bit, does not like company. Market never goes when everybody is looking for it. And if you put on the internet and you look and you listen to what they're talking about, silver, just about everybody. I have never seen so many people get bullish on silver all at once. And so it's either, the market is going to explode or do what it's doing, which is contrary to what everybody else is anticipating. It definitely was a dumping day today. And I'm trying to gauge to see if the selling has stopped or have we capitulated. So I am looking for reversions from here, especially down here to the upside. I talk to you as a trader here that they're way too low here in relation to everything else that's going on. And so I do expect to see buyers show up here from this level. So a close above 1738 activates the buy 2-level daily. 54 above activates the weekly and daily by 1. So you're getting the daily and the weekly getting long. So let's just watch the market here, looking for clarity in terms of where the market wants to go. You're looking at 1694 is the 61.8% retracement from the low that we made of 1450 to the high of 2089. Waiting to see if we activate any signals here from this level below, the extreme below the mean. The silver completed the target activated by 1 weekly 26.29. The low is 26.30. Okay, so it suffices the completion of the previous pattern here. So at 7:30, if we close above 26.29, this is a bullish pattern identified. This is a bullish trigger. The first bar is basically the trend alert, the trade alert. It tells us that it came down, almost tested the level by 1 weekly, and found buyers down here, enough that they couldn't bring the price to 26.29 and reverting back up. And on the close of the 15-minute bar, if it closes above here, it's activating a weekly buy trigger in silver. This is how you identify the turning points. In gold, it's about 1738 or 22. 25.30 is the low so far. Market is extremely oversold here for gold and silver. So you can see the buyers showing up here by the bar, by the green bar, by the bar turning green. For gold and silver, from where the AI recommends that it is the strongest area where you can expect reversions to occur. Even though the market comes down through it and takes out all of that demand, so to speak, this is the area where you want to pay attention to and see what the exchange of the supply and demand, how it unfolds here. These are critical levels. So the close of this bar here has activated a bullish trend alert because it closed above the weekly, the level of the weekly by two level of 1722 in gold. The silver did the same thing by coming down on this bar, and by coming down, testing the buy one weekly now and closing above it, activated a bullish trigger. So aggressive traders, when this happens, can buy the opening of the next bar. We use the 15-minute bar, so you could have bought the opening here aggressively, 1726. Conservative traders wait until the close of this bar. And if you entered aggressively, you can get out on a close below 1722. That's the methodology for the futures. So the conservative trade will get long on a close about 1722 at 745 for gold and 2629 for silver. It's a weekday for the longs. If you're carrying a core position, in the gold, I guess you have at this point, but no choice but to wait to let this chatter just kind of wash out in the market. This Reddit noise, this chatter is pretty much skewing what the market should be doing. Once again, the markets here, particularly in the metals, they go when nobody knows, when it's not in the headlines. Usually, when the move is made and it reaches the headlines, it's already done. The move is already done, and it's time basically to take profits at that point. So the market is resolving its, pretty much its volatility based upon the sentiment that's out there, which is highly speculative right now. And I don't know, how much this crowd needs to bully the short side of the market, and get results, because that's what they're doing. And I don't believe that the markets go or move when this kind of players are in the market. So, we're dealing with a new element. We're dealing with a new mentality, a new psychology. This is the millennial psychology, so to speak, that have become aware that there is a problem in the silver market. That's why I'm trading silver, I'm trading gold, because there is a problem in the physical market. There is a serious problem. The paper market is completely separated from obviously now the physical market. I mean, it doesn't take much of a genius to figure out that if you don't have supplies, that it should be reflected in much higher prices. So, again, the anomaly is that on the face of tight supplies, gold is down $50. Silver is down $1.25. Amazing. Buy into this correction. If you're serious about this market, you want to take advantage of these anomalies and you want to buy into this correction. Add to your core position, is what I say as a trader. Shut off this chatter and look at the market, look what it's telling you, and use these levels of the VCPMI to accumulate intelligently. This is a time to accumulate. The buying needs to be done down here, long term. This is time to add to your long-term position in derivatives. We see him buying coming into the market. This is what I mean by the buyers come in and the market reverts from these levels, and it has kicked in a buy signal from silver at 26.29. The thing is that 26.52 from 29, that's a big move. So if you get the signal to give you a big range in entry point, you want to let it go. Don't chase the market, because you should have a core position, so you're not missing anything. Wait for the signals to be activated. And in gold, it would be above 1738, and in silver above 2673. So what you see here is the algorithm identifying where the market is reverting in gold from the B2 level weekly. It's oversold on the daily below 1738. So if we close above 1738, it's going to activate the daily by trigger and the weekly from a very high probability level, which is the B2. And the B2 is a 95% relative implied volatility to the mean, which is 50-50. And what that means basically is that the mathematical probability now activating on the weekly signal of buy 2, it's activating a probability that the 1789 target is going to be completed once again. You see. This is the extreme above the B2 level of the weekly, and this is the average price. And so we're getting a signal activated from the weekly in gold and silver. And obviously silver is way above the 26-29 level that confirmed. So the risk reward ratio is pretty big here. And this is the reason why, I carry under the market a long core position, because sometimes the futures don't make sense to trade. It's too much risk. The profit factor may not be there. The risk reward ratio is out of whack. And so what it tells you is just wait for the highest probability trades to be identified. And that's what pretty much I'm showing you, that the trade, the next signal is going to be on gold at close above 1738. If you didn't take this signal here, which is a big risk, the signal was 22, it's trading 32. That's $1,000 risk. So once again, the volatility that we are getting is incredible volatility that we haven't seen in the history of these markets. And I'll be honest with you, ladies and gentlemen, it would not surprise me to see the price of gold unchanged by the end of the day in this kind of a market, and silver unchanged by the end of the day. And this is what I'm telling my traders, my subscribers, and you that pretty much are listening here during this live broadcast, to measure your risk and your profile based upon your profile appropriately. Because dollar moves, $2 moves, $40, $50 moves in gold are becoming common. And I think where we headed for are potentially moves that we could see in gold of maybe $200-$300 a day. Silver, we're already getting $4 or $5, $3 or $4 in a matter of weeks. And it would not surprise me to see silver go up $4 in one day. The only thing that this Reddit group or psychology or mentality does is it skews the market to extremes above and below the mean that mathematically speaking are unsustainable. And pretty much that's what the VCPMI does. It tells you exactly when to get in. Not to listen to the chatter, but exactly when the algorithm tells you to get in. And it's not 100% correct all the time, don't get me wrong, but at least you're making an intelligent decision. And it tells you when not to trade, when to trade, when to take your profits. And, depending upon how aggressive, conservative you want to manage your risk, it tells you 3 different choices for you to manage your risk. So we got a lot of volatility today, but I am taking advantage, as you see, with the VCPMI identifying the entry points where the market is reverting. What I would like to see is the market in silver get up about 27.18, which is the weekly average price. 27.11 is the buy one daily. So this would pretty much validate that we've reverted on the daily pattern, so to speak, and the weekly closing above 27.18 will kick in a bullish trend momentum, and we can begin to see the market directional uptrend unfold all the way up to that 27.73 again, which is the daily average. So we are extremely oversold. The average daily is 27.73, and we're trading at 26.61. Extremely oversold. So between the fundamental chatter that's been out there with regards to stimulus, all this talk about the money coming out, the money, the numbers are, I've lost track. It just, I happen to think it's getting to the point of absurd what's going on politically. While the economy, the physical economy has been broken, you got all this politicians using this as a political issue instead of expediting the process to alleviate Main Street from a lot of this economic pain that we're in. And the damage just keeps getting, deeper. And I think, as they always do, is to find a way to bury it under the carpet, so to speak. Make believe it didn't happen. We're dealing with such a great economy right now. When you're looking up from the bottom of the barrel, everything looks great, but we're still dealing with millions of people unemployed, and there's just no clear path yet in terms of when we're going to go back to some kind of normal life, normal economy. And then when we do go back, then the question is going to be, how fast do we want to spend in this new economy? We have pent up aggression, frustration. It's been a year that people have been pretty much on the lockdown, not being able to do anything that normally they would do, traveling and leisure. So we're slowly kind of trying to find our way to move back into this new economy that is, I believe, another highly virtual concept of the economy. Technology has become part of our life, whether we like it or not. And algorithms are running the show, so to speak, particularly the virtual economy. We're waiting for signals on gold about 1738 to get on the long side, and on silver about 2673. Once again, the market is what will confirm for us the completion of this correction here. So let's see where it wants to take us. But I do believe that we are definitely extremely oversold, in particularly, in relation to the again, availability of getting silver. You're not going to be able to go out there and buy silver without a huge premium. We're trading silver at 26, 27. You're not going to be able to buy it for maybe $33, $34. Maybe you're lucky and locally, and but people are holding on to silver in particular. And the whole world is aware that pretty much silver is becoming a very prominent precious metal, particularly related to industry, technology, medicine, and it's becoming more popular as we move into this virtual economy, this climate conscious economy, solar panels, and God knows what other products are going to come out. So the application of silver is universal, more now than any other time, which is why the supply and demand availability is extremely important. And the thing that we want to pay attention to is the demand that's coming from industrial demand. And if we get industrial demand to panic, we could see truly a remarkable explosive move in silver. So I think they're cautiously capping the price, particularly by using what these so-called hedge funds do, is to cap the price of most goods, commodities. But again, as long as I've been around, it feels like the markets, particularly in precious metals, are in a pressure cooker of manipulation. That it's not gonna last forever. All we need is this tremendous demand that we are beginning to see globally turn around, and it will make the Reddit crowd look like amateurs, because that money, I believe, is buying the market quietly, not making any noise. You don't want to make noise and explode the price, because you want to be able to buy as much as you can before it goes. So there are two markets that we're dealing with right now, obviously, and that is the cash market and the paper market in the futures markets, which is the one that, again, the short sellers of the market are able to use the instruments to be able to control the prices. And they control it by pretty much selling supply, selling contracts against the futures that have nothing to do with the production annually. They're paper shorts. But it does put a price, it does put a pressure on the price until they face the real demand, the real world demand. And when that happens, there's not going to be any central bank big enough or government big enough to control the stampede of buyers that I believe, are going to come in. The world is awakening. The giant is awakening in silver. And the only thing I can tell you is this, that when it goes, nobody knows. But if you're not there, you're going to miss it. Don't miss this one. Be patient. Continue to accumulate. Continue to use prudent money management. Don't over leverage yourself. Stay in the game. It'll pay off. Thank you again for the opportunity to share this with you today, my friends. I hope that you are having a great week. Regardless, please be patient. Take care of yourself, and I'll talk to you soon.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
Folks, John Najarian here with Steve Collegian, co-founder of Ticker Talker, and here we are in Master Control. And this is unbelievable, Stephen, because this is your E-mini screen right now. Show me what you're looking at.
So basically, I built Indicator 4 with my own predictive analytics, and as a trader, you want to be on the right side of the market. You want to be able to identify trends, reversals, and positive, negative divergences. I'm able to see divergence patterns, sell signals, picking up patterns that I'm able to call in the
And you're able to draw right on the screen, and that goes right out to the customer.
Right to the user. The user sees it as I'm drawing, constantly hit it.